What's going on, everybody? This is Caddy with Money Investing. So, what's happening? Good morning, good morning, good morning, good morning. So, very excited about the markets today. Brandon, welcome on board. Thank you so much for joining. Hello. Good morning, good evening. For Dean, thank you so much for joining in. Welcome on board. So, very excited for today because we are gapping down. So, there's going to be a lot of deals available. So, what's happening? Thank you so much for joining. Really appreciate your guys' support. So we're gonna break down the markets. We've got next week is actually gonna be very critical. It's gonna be a very important week because we have the FOMC meeting on March 16th and 17th. So the Federal Reserve, Jerome Powell, is gonna actually be speaking. I'm gonna break down the report on what he said earlier. So what he said like the last time there was an FOMC meeting in January. So I'm gonna break that down, and then we are going to break down what we could expect from the FOMC meeting moving forward, right? So very excited about that. Thank you so much for joining in. All right, let's take a look at the comments. Do something to prop up the markets. Well, this is good. Well, I personally missed out on Square. I was trying to get it under $200 a share, but that thing just recovered so fast. It was hitting, I think, as high as like $240 yesterday. I mean, look at the high for the day, $243. Like, it's okay. Like, this is like a healthy pullback. You know, it gives us the chance to go out there, shop again on some of the stocks that you guys are really interested in. So, you know, I really wanted to go over QQQ. Patrice, thank you so much for coming on board. You know, I basically do these live streams almost every day or maybe every other day as well. So I'll try to do that, you know, more frequently moving forward. So one of the things that I actually want to, you know, pin this is going to be the Patreon link. Again, if you guys want to join, the link is going to be right here. We're going to have our private Patreon live stream this weekend. So there's, you know, I post a lot of different stuff on our Patreon. So I post like ARK Invest, you know, briefings. I post summary notes. I post FOMC meeting notes. There's a lot of research and a lot of educational material out there that you guys will get access to if you want to join. Again, you don't have to. It's just an option available to you guys. We've got limited spots available. I think the middle, the investor tier has only got like 16 spots left, and then our member tier only's got like 4 spots left. So if you want to join, that right there is going to be the link. We're going to put in like a lot of different things. I miss you guys as well. So thank you so much again for joining in. I really appreciate that. We're going to break down again the Federal Reserve. That's going to be really important. The markets are down right now. So if you were to look at the QQQ ETF, we are trading down roughly 1.37%. So actually, let me go ahead and check out the pre-market. So ChargePoint down 7%, Pubmatic down over 6%, Riot down over 4.99%, trading all the way as low as $60. Although it did have pretty significant run yesterday, it was up close to over 12% yesterday. And then we've got NIO down over 3%. We're trading as low as $44. We got Tesla, Social Capital, Palantir, Square, Fiverr, Unity Software. Everything is in the red, right? So, I mean, as soon as I looked at the futures market last night, I looked at it this morning because I'm usually up when the futures market is up because of the time difference. So, I mean, it was brutally red. It was down over 1%, and so, like at some point it was down over 1.8% as well. So Antonio, all of that is actually going to be posted. So a lot of the research and a lot of the educational material, a lot of the analysis is posted on our Patreon. In fact, let me actually go ahead and kind of go over exactly what this type of stuff that I post on the Patreon. So, you know, you'll notice that we've got, actually if we get up to 500 patrons, then I will be posting free tutorials for you guys on fundamental and technical analysis, right? How to recharge, how to go over technical analysis, map out different support resistance levels, look at the balance sheet, look at income statements, look at different valuation metrics, price to sales, price to earnings, all those different things. This right here was a growth portfolio update that I just updated everybody on March 12th. Again, technical analysis on your favorite stocks. So this gives you the opportunity to kind of list down one stock you want me to look into, and I will go over that during our private live stream that we have this weekend. We've got a little bit over 270 people right now in this Patreon. Again, I'm trying to get to only 300, not trying to exceed over 300. So that's where we're gonna kind of tap out, and I'll close that up. And then this right here, again, you'll have access to our Discord, the TradingView charts. You'll have access to the Tesla Excel worksheet where we go over the different valuations, price to sales, price to earnings ratios. And then this right here is going to be, again, ARK Invest, market summary, briefings, kind of like my notes. We go over a lot of different analysis and research as well. So we're going to break down a lot of different things, a lot of different stocks. So again, I hope you guys really enjoyed this video, find it helpful. Make sure that you drop a like and subscribe if you're new here. We talk a lot about fundamental and technical analysis as well. So let's take a look. So let's take a look at how many people we have watching, and let me adjust this right here. So we got a little bit over 200 people watching. Again, make sure that you guys drop a like. It really helps out with the channel. You guys know that. It really helps out with the algorithm. So we're seeing some type of a mild rotation again. Not so much of a mild rotation, but we are seeing some type of a rotation out of tech again over to some cyclicals and value plays. You'll notice that Procter & Gamble, Johnson & Johnson, JP Morgan, Bank of America, Wells Fargo. So financials are up once again. GameStop trading as high as 268. So if anybody's trading this stock right now, again, congratulations, because this stock again has been on a rally recently. So very, very excited about that. And QQQ ETF is down a little bit over 1.3%. And this is something, shout out to I can't remember the name, but they actually commented to bring up the 50-day and the 21-day simple moving average. So in my previous videos, we were talking about the 21 and the 50 exponential moving average, right? So that's what we've covered in the past as well. And how we were potentially seeing some type of a breakout. But if you were to look at the 21 and the 50 simple moving average, so that's a little bit different than exponential. So that's going to be this right here. Those two lines you guys see in purple and pink, you'll notice that in fact we are getting rejected at that level. So that paints a little bit of a different picture for the markets instead of the exponential moving average, right? So what do you guys think? Are we gonna potentially make new lower lows for the Nasdaq? So if I go over to IXIC, you'll notice that we are getting rejected, and we're potentially going to open somewhere around 13,000 points, or let's see, 1.5% drop from its current levels. We're gonna open somewhere around 13,100, call it 13,200 points. Do you think we're gonna retest 12,600? What do you guys think? Let me know in the live chat if the Nasdaq is once again headed back to its lows from March 5th. What do you guys think? Do you guys think the Nasdaq is headed back to March 5th, its lows from 12,600? Do you think, are we gonna make a lower low? Are we gonna break down below this level? So if you were to kind of map out this sort of move, you guys will notice that we break down, we push up, got rejected, we sold off even further, we push up. This right here, do you think we're going to make some type of a higher low here? Or if we're going to break down further, make some type of a lower low all the way down to 12,100? What do you guys think? Low at 12,700. Nope, straight back up. Not big enough. Nope, not big enough a catalyst. I hope so I could buy the more dip. And that's Nicholas, that's a great mentality. And that's what I want you guys to understand as well. Is like these red days, that's when I get really, really excited about. Like today, like when I looked at the pre-market, Osman, thank you so much for really commenting as well. So yeah, so I mean, these red days, when I look at the future market, when I look at everything pre-market down, is what makes me really, really excited, because I can go out and buy some more stock. Because yesterday and Tuesday, you guys know the rallies were absolutely incredible, right? So much green across the board. I did not do any buying on those days, except for the past few weeks when I have been consistently kind of nibbling in a little bit more because the Nasdaq corrected a little bit over 12%. So, again, very, very interested to find out where the Nasdaq trades rest of the day, rest of the week, going into next week. The stimulus was signed, so we're going to find out more if we actually come down to make lower lows, or if we come down to make some type of a higher low or a horizontal low, right? In my opinion, the likelihood for the Nasdaq to make a horizontal low or a higher low are much higher than we make a lower low, because we've already corrected 12%. And that's what, I also wanted to kind of address this social cue and the social sentiment that a lot of people have been bearish on the markets. And guess we'll talk about some other stuff as well. But 12% correction, do you guys think is that reasonable or is that not enough? What do you guys think? So let me know in the live chat if you guys think that 12% correction for the Nasdaq is reasonable, is decent enough of a pullback, or if it's not enough, it needs to correct more. If it needs to drop like 16, 18, 20%. What do you guys think? Like a 12% pullback, and the S&P 500 was down a little bit over 6%, which is okay because energy and financials have been keeping it up. So in fact, actually, let me go up and bring out our select sector index. And again, all these charts are going to be available to you guys through our Patreon. So everything is going to be accessible. You'll have access to these charts as well. So it's reasonable, 10 to 15%. Pretty, I think more. 12% is the limit. Not enough. On average, it's around 13%, so it's good. 20%. So 20% or more puts us in a bear market for that index. So if the Nasdaq corrected over 20%, it would put us in a bear market over valuations, over interest rates. Like, this is not something that's happened, once in 100 years, like the pandemic did last year, that put us in a bear market. And even then, the Nasdaq was down like, 30%, 35%? When you think about interest rates, valuations, the problem with that is that when the stocks keep dropping, like at some point, the valuations become attractive once again. Like if you look at the PE ratios, price to sales, and a lot of other valuation metrics, when the stocks keep dropping as fast as they did the last few weeks, they do become attractive to a lot of investors. Like, it's all about risk on and risk off, right? You've got your risk off when the markets are hitting new all-time highs, your risk on when they're at like a 12%, 16% correction. So corrected more than expected, one red day, and then we continue to green next week. I think 20% is unlikely due to the economy opening back up unless that's already priced in. I agree. With the economy opening back up, we've got the stimulus coming in. I think 12% was a reasonable pullback and a correction for the Nasdaq. And the only question is, moving forward, if you're going to make any type of a progress for the Nasdaq, if you are going to make any type of higher lows or a horizontal low. If you make lower lows, that's when things get a little bit uglier and we get some type of a cause for concern. Again, great shopping days from a buying perspective, but from the market's perspective, that's when we could see some more downside for the Nasdaq as well. So let's take a look at the markets overall, and then I'll actually break down the FOMC meeting report from January 29th. That was the most recent and the latest report that we have on file. And then next week, we've got March 16th and 17th. We've got another Federal Reserve, Jerome Powell, will be talking about with the FOMC and what their policy is going to look like in terms of the monetary policy, because that's what they control. The fiscal policy is the government, monetary policy is the Federal Reserve. So we're going to do a much deeper dive in our private Patreon live stream over the weekend. I'll go over what we can expect as well moving forward in terms of rates, in terms of taxes, the labor market, and a lot of other things as well. So again, if you guys want to join, there is going to be the link down in the description below. But take a look at the S&P 500 ETF. So that's going to be ticker symbol SPY. We are down roughly 40 basis points, so we did hit some type of a double top resistance right here at close to $393, $394 per share. In fact, the high for the day was $395.65, and then we are down roughly 40 basis points, and pretty much energy and financials is my guess is what's keeping the S&P higher. So financials are up over 61 basis points. We've got tech up over 45 basis, so that's interesting. And then energy is also up over 30 basis points as well. Another really interesting thing that I wanted to address is going to be the 1 year time period that's gone through from March 2020 till March 2021. Because a lot of people bought the dip back in March, and if 365 days go by, they'll be able to kind of lock in those profits at a long-term capital gains tax. So, do you guys think that we are going to see some type of a selling pressure from a tax perspective, that people want to kind of capitalize and lock in some profit and maybe capitalize on those long-term capital gains as opposed to short-term gains, and then 1 year would have passed by since when they bought in, so March, April, May. What do you guys think? Let me know in the comments, let me know in the live chat if you guys think that we are going to see some selling pressure strictly based off of that ideology or that reason that we could see some long-term capital gains kind of priced in, and for people to actually kind of lock in some profits from 2020, which was an incredible year for the equities market. So what do you guys think? Let me know in the live chat. I would really appreciate that. So let's take a look at how many people we had. So 485. Again, make sure that you guys drop a like. Let's see if we can get to at least 200 likes. That would really mean a lot. So all right, I don't think we're gonna see a downward pressure from a tax perspective. I expect a little crash. It's likely 1 year since Corona crash. I agree. And the theoretical effect on the Nasdaq. That's a great, Carlos. I will definitely look into that. So let me take a look. So 2% bond yields. So let me copy that really quickly, and then we'll go over to this. All right, this is actually a great article that came out 1 hour ago. Thank you so much for sharing. Good point, but I'm not sure there will be a glut of selling pullback. All right, I actually need that subscription for Market Watch. Let me see if I can try this. Yep, I don't think I'm gonna be able to see that article. So all right, let's take a look at this for us to understand where the yields could be, and where the Nasdaq could end up. This is actually a great article that I haven't really gone over yet, but we'll see. All right, so in early Friday action, the yield on the 10-year treasuries were rising and the Nasdaq 100 futures were falling. That's been the pattern over the last month. After a very close connection since the pandemic began, inflation-adjusted yields have kept climbing, but the Nasdaq 100 has suffered. That makes sense given the rich valuations tech stocks enjoy when safe bonds offer more than crumbs as returns. They present an investment or alternative to stocks. So this right here again is going to be the relationship between the Nasdaq 100 and the 10-year break-even inflation rate. Again, the blue line surging higher, and then we've got the Nasdaq 100 kind of falling. But we also have to understand at what point that relationship is going to break, right? At what point the yields are going to continue to go higher, and the Nasdaq 100 is also going to go up, because it goes back to our argument. Well, when are these valuations going to become attractive once again? Like, are you? All right, let's put it in a hypothetical question. How many people here in the live stream are going to buy, let's say, Apple under $80 a share? Yes or no? That's a simple question, because under $80 a share, we're talking Apple priced in at $1.5, $1.6 trillion. That's going to be a drop of another, I want to say 15, maybe 18% from the highs. So what do you guys think? Yes, definitely yes. So that's kind of like the psychology, right? That's simply the psychology of the market. Is yes, the valuations were out of hand, no doubt about that, right? They were trading at incredibly high levels because the interest rates were really low, and you're pricing in a much faster growth in the future. But when the stocks drop, let's say Apple over 18%, we had Tesla like 38, 40%. In fact, I even ended up buying some over the past few weeks. You have Tesla dropping over 40%, now trading at close to 500, 600 billion market cap. Good morning, everybody. Thank you so much for joining. So I really appreciate you guys. At that point, it becomes a little bit attractive. No, it's like, I really want to get in on Tesla at this price. And that's when kind of like the buyers kind of step in once again. So analysts are now modeling just how far tech could fall if bond yields keep rising. Joe Kalish, who's the chief global macro strategist at Davis Research, says the Nasdaq 100 could fall 20% from its peak if the 10-year treasuries reaches 2%. Okay, so he's a little bit over 4% my own projections. If I were to, I don't know if I'm going to have my projections once again. So actually, let me take a look. So this right here is my projections for the Nasdaq, right? So you guys know, if you've been watching my analysis and sort of my estimates, this right here was kind of like the estimates that I had. I had the VIX topping out at 40. I had the yields topping out at 2%. That's exactly what we're discussing right now. So the yields kind of top out at 2%. The Nasdaq bottoms out at 11,800. That's going to be a correction of 16%. So what he's saying that we could see a bear market almost get hit by 20%. So actually, let me go ahead and delete this. So what he's saying is that a 20% correction is possible for the Nasdaq if the yields kind of reach as high as 2%. So yields at 2%, he's estimating a 20% drop. Let's take a look at why that is. The index is already down 6% from its peak. This looks like the Nasdaq 100, and then this right here is going to be the Nasdaq 100 forecasted, and then this right here are going to be stocks undervalued, stocks overvalued. All right, so the equity risk premium. How many of you guys know what equity risk premium is in terms of valuation wise? Let me know in the live chat. And then I'm more than happy to go over it very, very quickly. It's not that difficult for us to understand, but I will go over that very, very quickly and what that equity risk premium looks like for the markets. So let me know in the live chat. I will go over that very, very quickly. All right, so the equity risk premium is basically what you pay as a premium to invest in the stock market. So basically what it means is that you're taking on more risk to invest in the stock market versus investing in the bond market. So we know that the fixed income asset class, which is the bond market, is known for having a risk-free rate, right? It's more safe. It's a much safer investment for a lot of institutional investors, for a lot of people out there, versus investing in the stock market, right? Investing in the stock market carries a lot of risk. Investing in the bond market, not so much. So what investors try to value is, well, what is my risk premium for investing in the stock market versus investing in the bond market? Now, when the bond market starts competing with the stock market in terms of yield, in terms of returns, that's when things get a little bit dicey. Meaning, if you are able to achieve a very similar return in the bond market, why take on the more risk and invest in the stock market when you are achieving or earning the same yield? Now, one of the things that we use to value stocks or value companies in this case is a discounted cash flow model. Now what that does is we take into all future cash flows for a company, of course projected cash flows. So let's say Tesla is expected to grow at a 50% rate of return or at compounded annual growth rate for the next 5 years, right? We expect that Tesla is going to grow at a 50% rate over the next 5 years. We grow their cash flows out till 2025 for the next 5 years at 50%. Then what we do is we discount those cash flows back to present value. And what we use is what's known as a discount rate. Now, discount rate is calculated through two different pieces. We calculated using a cost of equity, and we calculated using cost of debt. So that's going to be this spreadsheet right here. Again, this is a project that I did back in school. We had the future free cash flows for a bank projected out 2021, 2022, 2023, 2024, and 2025, right? And we have the cost of debt. Basically, how much does it cost for the company to borrow debt? And this right here is going to be cost of equity. Now the risk-free rate that you guys see here, so let me go ahead and highlight that. So the risk-free rate that you guys see over here, oh, my bad. So the risk-free rate that you guys see over here in this side, like right over here, like 0.662, that's the 10-year yield. That's the 10-year yield that we use in our DCF model. When that yields go up, the discount rate drops, hence the future cash flows present value drop as well, hence taking a hit on the valuation. Do you guys follow? So if the yields keep going higher, the discount rate drops, and then we have the valuation kind of skewed towards being less desirable in the future. It obviously hurts high growth companies that are growing or expected to grow in double-digit growth rates in the future, and prefers or benefits companies that have cash flow today versus in the future. That's the only difference. That's the only key difference between the bond yields going up and equity risk premium kind of getting skewed in the favor of the bonds. So moving forward, Kalish's calculation depends on other relationships holding steady. He says that earnings yield and forecasted corporate bond yields have moved in tandem since 2014. A 2% 10-year treasury would likely cause the bond yields on BAA-related bonds, the lowest investment grade rating, to to reach 4.5%, requiring a 20% drop in the Nasdaq 100. And that relationship is consistent. So theoretical impact of instantaneous rise in bond yields. All right, so that's pretty interesting. So this is actually, again, Carlos, thank you so much for sharing that and mentioning this article. So basically what they're saying is, assuming a constant earnings yield ratio minus bond yield spread, so if the bond yields are rising at a certain rate, so theoretical impact of instantaneous rise in bond yields, if they go up over 100 basis points, we're looking at a PE ratio of 40, and then that's going to lead to a 25% drop, versus if we do drop below. So actually, let me see if there's like a chart. So what he's projecting is like a PE ratio of 30 and a drop of about 20% for the Nasdaq 100 is what I'm gathering from this. But again, there's like no sort of different color chart for what these lines represent. And there's like no index as well. So all right, we'll come back to this chart and I'll try to figure out what exactly that means. But strategists at French bank Societe Generale tend to agree. They've looked at the theoretical impact of rising bond yields at different price to equity ratios. Given that the Nasdaq composite is trading at 31 times earnings according to FactSet data. That said, most notable is that Kalish remains bullish on stocks even with those risks. And that's kind of like where I personally stand too. It's like, we need to be cautiously optimistic about the markets, and we could see, let's say, a 16% drop is what my expectation is, right around 11,800. And then for the S&P to kind of bottom out at 3,500, that's going to be a correction of 11%. We'll see if that actually happens, because energy and financials are keeping up the S&P 500 much, much higher. And then reading further, he looks at another measure called valuation using Census Bureau data on cash flow margins. As cash flows have improved since the 1990s and the cost of capital has fallen with interest rates, the economic margin has risen. Right now, that margin is above 5-year average. And in the US, the firm is recommending small caps over large caps and value over growth. So, yep, right now that's kind of like the theme is like value over growth. Small caps have a lot of more runway ahead instead of large cap. 20% according to him, 16% according to me. That's only because of the rising yields. And let's take a look at the markets. The SPY is down about 26 basis points. Let's take a look at the Qs. Down about 1% right now. We still have a little bit buying pressure coming in. So if I were to go over to the 5-minute chart, so you'll notice that we are getting bought up just a little bit after this huge gap down. We're validating like 312, so to speak, on pre-market, and we are pushing higher. So let's take a look at some of the other stocks before we jump into the FOMC meeting notes from January 29th. Let's take a look at how many people we have. So 704 people. Again, make sure that you guys drop a like. Let's see if we can get to at least 300 likes on this live stream. ChargePoint down about 11%, trading as low as $27 per share. We've got PubMatic down over 6%, Riot down over 6% as well. Is Bitcoin down? Let's take a look. So let's take a look at cryptos really quickly to understand why Riot and Mara may be down. So Bitcoin is down a little bit over 2.5%. Let's take a look at if it hit a new all-time high. Soros, thank you so much for that comment. I really appreciate you, and I respect that comment. But we're trying to analyze the markets, and we're not one side biased or another. If the markets go down, great. We'll be here to buy it. And if the markets go up, that's awesome too. But thanks again for that. So Bitcoin down a little bit over 2.5%. Let's take a look at Vroom down over 3%, NIO down over 2.8%, Tesla down over 2.6%. So NIO and Tesla, they were down a little bit more than that. They are getting bought up. So this right here again is going to be pre-market. And we are seeing some higher highs and higher lows. Tesla trading is at 688. Again, we are seeing some type of buying pressure. It was trading is at 684, and we are seeing some type of a pullback pre-market as well. Palantir trying to stay above $25. That's going to be the level to watch. Very, very important. If Palantir kind of validates that $25 level, right now we're trading as high as 26, so we're up down just about 2%. Let's take a look at Square. It's down a little bit over 2%, trading as low as $236. Again, under $200, I would really consider getting in on Square. We've got C3AI. Now this company reported their earnings. I'm still doing a lot of analysis on this company. I will post another video on this as well, because this has been caught in the headwinds as well with the market sell-off, and it's been down like substantially from the highs. Enphase Energy is also one of the stocks that I'm considering if it comes down to 150, 145. Again, I posted a research report on this on our Patreon, going over the revenue forecast, going over my price targets, and where I personally see this company going. So if you do sell off today, I will consider maybe starting a new position on Enphase Energy as well. Shift Technologies is also on the watch, down about 2%. We've got Unity Software down over 1.6, finally back over $100. The world is ending. Why would you say that? I'm really curious to know why you would say that. Let's take a look at some of the other. Alright, so we got Alibaba is also down over 2%. So again, we're seeing some type of value pick up. So again, PayPal is up a little bit, of Chevron, Johnson & Johnson. If you guys did get a chance to watch the market briefing from yesterday, this was one of the articles that we broke down. So research, actually it's not going to be over here. Let's take a look at if I have it over here. Oh, right here. So this was the state of the markets yesterday. Of course, with Tesla, Amazon, Microsoft, Apple, like big tech and semis doing really well as well. Oh, okay. All right, you were joking. So, okay, that's good to know. So, and then this right here is going to be the 1 day relative performance, 1 week relative performance. Jesus, what is wrong with people today? Alright, so 1 day relative performance, 1 week, we're still up. Consumer cyclicals, industrial, basic materials, still pretty much every sector is in the green in the past week, because we've seen like a broad-based rally. We've learned from ARK Invest as well, kind of like the bull market kind of broadening out to other sectors, which makes sense, right? We're seeing other sectors, other value sectors as well, push up higher. But in the last month, you'll still notice that technology, healthcare, and consumer cyclical are still the ones kind of lagging behind. Tech is down a little bit over 6%, and then healthcare, consumer cyclical, utilities, again with this rising yield, that's kind of like the sectors that it affects the most. And then, energy, financials, basic materials are still up in the greens. So those sectors, again, are benefiting from this rotation out of tech over to value and cyclicals. So, all right, let's take a look at some of these stocks again. We have a lot of red right now. We'll see if we actually get bought up intraday, but it's all right. I mean, it's a regular pullback. It's a decent size correction for the markets again. All right, so now we're going to go over to the FOMC meeting. Very, very important that we need to break down before the next meeting, which is going to be on March 16th and 17th. So this right here is going to be the complete breakdown. So again, you guys are more than welcome to kind of go over to federalreserve.gov. They post their schedule here. So January 26th, 27th was the first meeting. And this right here, March 16th and 17th, is going to be next week. Thank you so much. I really appreciate your guys' support. Again, thank you for the great comments. March 16th and 17th is next week. So that's when Federal Reserve Jerome Powell, again, speaks FOMC meeting. And this right here is going to be the complete report that I am going to break down very quickly. That gives us a good idea on what they're looking to do, and what we can expect moving forward from a more macro level as well. So, all right, let's see. Because it cannot be clear for people not from U.S. 10-year bond yield are much safer for investors, so more money in bonds. Yeah, so I mean, it's more appealing, gets more appealing because it starts competing with S&P 500. If you look at the S&P 500 earnings yield and the dividends yield, actually, let me pull it up really, really quickly. So if you were to type in S&P 500 earnings yield, and so it's 2.92%, right? The S&P 500 earnings yield is at 2.92% right now. And if you were to type in S&P 500 dividend yield, the mean is at 4.31%. And I think it was a little bit lower than that as well. But it may have gone up because of the share prices going up as well. So, the basic argument is that it starts competing with the equities market as well. So the bond starts becoming a little bit more appealing as well. That's the sole reason why we're seeing a rotation away from tech over to some value, because those are stocks that get benefited from it most, and some other sort of, but because when you're talking about big pension funds, hedge funds, retirement accounts, they'd rather take that over taking on the risk from investing in the equities market. So this was posted on January 27th at 2 p.m. Eastern. The Federal Reserve is committed to using its full range of tools to support the U.S. economy in this challenging time, thereby promoting its maximum employment and price stability goals. So we've had Federal Reserve Jerome Powell talk on Wall Street Journal webinar, talk about a lot of different things, and it's really, he's never gone into very, very much specifics, but rather vague comments, because that's the only thing that he can really give us is, that he's looking at full employment in a different way than previous Treasury Secretary, and he wants the inflation to run up a little bit over 2%. So you'll notice how the committee seeks to achieve maximum employment and inflation at a rate of over 2% over the long run. Right? With inflation running persistently below this longer run goal, the committee will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time, and longer term inflation expectations remain well anchored at 2%. So that's the most important thing, is that we had the CPI report come out on Wednesday or on Tuesday, like sometime this week, and we also broke it down. And basically, if you were to take out energy and food, if you look at core CPI, that's ticked lower. By the way, I want you guys' analysis on this as well. What do you guys think is going to happen with airline fares, used car market, and apparel, and some of those other sort of areas of CPI that actually went down? But once the economy reopens back up, what do you guys think? Do you guys think that we're going to see like airline fares stay down, or are we going to see like airline fares, apparel prices, we've got retail, we've got a lot of other sectors like car market actually tick up higher? Do you think the prices are going to curl up higher, or do you think we're going to see some type of a pullback once again, month over month, when we're talking March, April, May? What do you guys think? Because again, for inflation to be over 2%, the consumer price index, the CPI, again, has to be curling up as well month over month. Sean, I really appreciate that. Thank you so much for joining, and glad the videos are always helpful. Airlines will go up higher. I think airlines still will be stagnant for a long while. It really depends. I mean, because when you look at business travel, and when you look at leisure and like sort of traveling because you're visiting family and stuff, I think that part is still going to be there, but it really, really depends on business travel, right? Are we going to see any type of like these business meetings? Like, when I was in Boston, we had a lot of people from our company kind of travel from Boston to like DC, from Boston to Chicago, Boston to New York. Like, we were constantly like going back and forth, domestic flights to meet with people. But now that we have like Zoom and we have a lot of other virtual, video conferencing apps, the real question is if the business travel is going to come back up, and where the leisure and sort of like, when we see family during the holidays, that kind of travel is still going to be up there. So that's awesome, Alan. That's great. I've never been to Sweden, but I would definitely come by and help you out with shoveling that snow. I love the cold weather, and I love snow as well. So the committee decided to keep the target rate for the federal funds rate at 0 to about 0.25%, and expects it will be appropriate to maintain this target range until labor market conditions have reached levels consistent with the committee's assessments on maximum employment. Again, we don't really know what that is. It's not specific unemployment rate, but Jerome Powell is looking at a variety of different metrics and data points, such as demographics, the labor market in terms of how many openings there are, how many hires there are. So he's looking at a lot of different things to really assess the full employment in terms of the labor market. So, and then last but not least, he goes by saying that in addition, the Federal Reserve will continue to increase holdings of its treasury securities by at least $80 billion per month, and of agency mortgage-backed securities by at least $40 billion per month, until a substantial further progress has been made towards the committee's maximum employment and price stability goals. So that's another thing that a lot of people were kind of hoping when he last spoke, which was seen as some type of a negative, is, he was basically, a lot of people were expecting, a lot of investors are expecting that he's going to go out there and say that, the central banks are going to start buying treasuries once again, hence boosting the prices and then dropping the yields, right? So that another thing was basically was something that he did not address, or basically did not tell us about it, or put any color on it. So that's why the markets dropped right after Jerome Powell spoke, right, with the Wall Street Journal webinar. So in assessing the appropriate stance of the monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goal, and the committee's assessment will take into account a wide range of information, including readings on public health, which has improved substantially since January. Labor market conditions have also improved substantially since January. Inflation pressures have been quite up there, so we're seeing like 1.7% total CPI and about 1.2, 1.3 core CPI, I believe. And then financial and international developments as well. We had the ECB also speak. Past couple of days we had Christine Lagarde, who's the president of the European Central Bank, also speak with Bloomberg. Of course, we had the policy meeting as well. So a lot of things he's going to address in that meeting next week. So it's going to be very, very interesting for us to find out, what exactly happens. But this right here, again, very quickly going over some 4 to 5 things to go over on the day. We already have the bill that's already been signed. China's tech moguls are facing backlash at home and abroad. Tencent Holdings has become the next target in a crackdown by Chinese authorities that began with Jack Ma's Ant Group IPO. According to people with knowledge, nation's top financial regulators, the conglomerate was dealt an antitrust fine that marks the beginning of campaign of tougher regulation. So let's take a look at where Tencent is trading. So Tencent, we are pretty much flat right now. But Tencent was down a little bit over 4%, right? So 4% it was down when the markets were open back in Hong Kong. Pretty much because of this reason, I'm assuming. But reading further, this right here, the bond moves. The benchmark 10-year Treasury yield surged as much as 8 basis points to breach the key technical level of 1.6% Friday, reminding investors that bond volatility has become the companion of go big fiscal stimulus. Bets that extra government spending could overheat the U.S. economy were out in full force after the U.S. president signed off on a $1.9 trillion stimulus. European yields are lagging the move higher in treasuries, prompting strategists to bet on greater divergence unless the Fed does anything to change it. and most European central bank policymakers have no intention of expanding their 1.85 trillion euro, $2.2 trillion emergency stimulus program. So that's also what we learned about, that it's pretty much going to be unchanged. They are still going to keep that yield curve in check. But again, moving forward, on Thursday to step up pace of the bond buying to keep the yields in check again. So they're going to be watching that. They're not going to change anything when it comes to the intention of expanding their emergency stimulus program. Brian, thank you so much. I really appreciate that. I believe the Nasdaq can reach an 18% given US 10-year yields at 1.6 this morning. 2% seems to be in the horizon as well. Yeah, and that's kind of like the expectation we have, across the board, is if the yields have what it takes to hit as high as 2%. Right now we're trading slightly under 1.6. Another thing is, again, the key technical resistance level that they mentioned in that article was going to be sitting roughly at 1.6, I want to say 1.605. That level we got rejected for the yields. This is coming back from March 8th and 9th. We sold off, we kind of validated and then pushed up higher once again. Do you guys think we're getting rejected here? Do you guys think we're going to see a double top for the yields at 1.6? Or if we are headed much higher, if we're going to break out over 1.6 as well? What do you guys think? So let me know in the live chat. We should have a lot of people watching by now, so we have a little bit over 795, almost 800 people watching. So let me know in the live chat, what do you guys think about the resistance from the yields, and if we're going to see a breakout over 1.6, or if we're going to get rejected. Rejected. Double top. Let me go ahead and remove these simple moving averages and bring out the 50 and the 21s. All right, breakout, rejected, short-term higher. See, that's another thing, is like the bond prices, like the bond market is so overly shorted and oversold, is that how low can the prices go? Right? Because that's what's happening here, is the prices keep going down. That's what's pushing the yields higher. So, we had the 30-year yield, we had the 30-year auction, we had the 10-year auction, which was reasonable. It wasn't as bad as a lot of people were expecting. There were still investors and buyers present, and that's what caused the yields to kind of pull back a little bit. In a while, reject. If this was a stock, we would be saying overbought. That's a great point. If you were to look at it from a stock perspective, it's not quite overbought yet, but it definitely could go higher. That's kind of like what the estimates are, and we need to price in ourselves as a 2% yield, right? That's kind of like the worst case scenario. In my opinion, the Nasdaq could potentially drop 16% from all-time highs. So after yesterday's move, we're talking a pullback from all-time highs of close to 5.5%. This right here was a pullback of over 12%. And if it does come down to like 11,800, we're going to see a pullback of close to over 16%. Let's get ready to buy the dips. And yeah, that's going to present some really, really incredible opportunities, right? So, it goes without saying that tech at one point will become really, really appealing, and that's what I'm going to consistently be kind of adding more shares of. Like I would love to own more like Tesla, more Apple, more Amazon, more Microsoft, more Square, at better and better and better prices, because my time horizon is much, much farther out, right? So we're talking like 5 years, 7 years out, where I strongly believe that these companies are going to be the ones kind of changing the world and driving this change from like traditional banking to like digital wallets, from like combustion engine vehicles to electric vehicles, autonomous driving, and then really, really interesting to find out what Apple comes up with, right, with their EV manufacturing and different cars. What do you guys think? Who are they going to partner with? What do you guys think about Apple, and who are they going to partner with? We're going to start individual stock analysis around 7 p.m. Until then, we're just going to talk about the markets, talk about different things. But at 7 p.m., we're gonna start like 7 p.m. my time, so that's gonna be 8:30 a.m. Eastern, 8:30 a.m. Eastern, and then about 6:30 a.m. Pacific Standard Time is when we're gonna talk about different individual stocks and do technical analysis on them. So 12 more minutes. Toyota, Lucid would be great. Volvo, Ford, NIO, Kia Motors. So we had Daniel Laz on the channel. He's a managing director at Redbird Securities. We had a 30-minute interview with him, and he sees VW and Kia as the solid potential candidates for another EV manufacturer for Apple. Right? Those are the two companies that he sees that are going to potentially be the ones that Apple is going to partner with. But there's a lot of companies out there. So in my opinion, I'm kind of inclined and leaning more towards VW and Kia as well. But we'll see. Like, he is expecting Apple to announce it within the next 3 to 6 months, and he's really bold with his price targets. Like, he has Apple targeted at 3 trillion market cap, 175 price target. He has Tesla with a base case of 950 and a bull case of 1250. So like, he sees tech rallying 30 to 40% this year alone. And of course, us pulling back in the beginning of the year, so Q1, the more we pull back, the more we create upside the remainder of the year. So I would rather have a green in 2021 rather than hoping for having a green February or a green March, right? Because these pullbacks, I would rather have a much severe March and February and even April if that leads to a much stronger 2021, rest of the 2021, and Q3 to Q4 having a really, really strong rally for tech and for Apple, Tesla, all these other Nvidia, AMD, like with the global chip shortage, like I'm very, very heavily bullish on and have a lot of conviction. And then we've got other stocks as well. Facebook, in my opinion. How many guys are invested in Facebook right now? What do you guys think about Facebook? Undervalued, overvalued, has a lot of potential. What do you guys think about Oculus? Let me know in the live chat. So VW is a force in EV. Kia, Volkswagen, and NIO. Volvo has the most secure cars in the world. Seems like an Apple move. Interesting. That's good to know. Too risky. Facebook is undervalued. Sold all. Facebook has a lot of upside. I am an undervalued. I strongly think that Facebook is somewhat undervalued. Like they should be well over $300 a share, in my opinion. With the only thing is it's the same situation with Alibaba. Like when I compare Facebook, I compare it with Alibaba because they've got so many external factors to deal with, the Chinese regulations. In this case, Facebook with the FTC, with so many lawsuits. They're looking to break up Instagram and Facebook. I mean, that's just going to go on for a long time. So, I compare Facebook with that, and I do see a lot of upside in terms of the fundamental value and, the revenue, the EPS, and the balance sheet items, everything, all of that is severely undervalued for Facebook. And I do believe that they could be easily well over $300 a share. Right now they're down just about 1%, trading as low as 270. So Alexandru, my opinion on AMD is that I'm very confident. I have a high conviction on AMD. Like my price target is well over $110 a share on advanced micro devices. Again, that's just my analysis and my opinion, based on the global chip shortage, based on the management that I've studied, based on Lisa Su's forecast for 2021. 37% revenue guidance is not small, right? It's a pretty big guidance, and then coming every year and exceeding that guidance. Like if I were to bring out AMD's presentation very, very quickly, because I really want to go over that, they ended up beating their own guidance, and they haven't done that once a year. Like they've done it consistently over and over again. So let me see if I can actually bring up the earnings report. All right, slide presentation. We're gonna go over that really, really quickly. So this came out in January. I have a separate video on it, so we broke it down as well. So annual revenues jumped over 45%, and they actually guided us. So 45% increase for the 5th straight year. Like, I'm surprised how they're not getting tagged as a growth company, or they're not being labeled as a growth company. Alex, AMD versus Nvidia, if you could only hold one, I would personally hold AMD, because I feel like AMD relative to Nvidia is slightly undervalued because of the price to sales, the price to earnings, like some of those ratios that we look at. Again, let me see if I can bring that up really quickly because there's just so much stuff that we have here. Again, all these things are going to be available. Like most of my research and analysis is published on our Patreon. So if you guys want to get access to these spreadsheets, if you guys want to get access to these presentations, these PDFs, everything will be posted on the Patreon. So if you want, the link is going to be down in the description below. So AMD, we're looking at a price to sales of 10. Nvidia, we're looking at twice that, right? It's trading at 20 times sales. When you look at price to earnings, same case, right? AMD is trading at 41. Now, if you were to compare it with traditional metrics, now of course AMD is still like richly valued. When you talk about the S&P is average, when you look at some of the other growth stocks, like Apple is trading at 33. Amazon is trading at 74, right? Facebook is trading at 26, which is why I believe that Facebook is a little bit undervalued relative to some of the other companies, and they deserve higher multiples. It's not like, you know, you can make an argument, well, the S&P 500's average is, 35 or 22, then these companies are overvalued because they deserve higher multiples because Apple shifting their business model to services, higher margins, higher EPS in the future, we could see a much higher price to earnings. Facebook, same thing, right? Amazon, AWS, really depends on what their growth looks like in the future. And Square, Tesla, services, more of a services business model, so they deserve that higher multiple. Now, it really is debatable, what is a right versus wrong multiple. But for AMD versus Nvidia, I do see AMD being the better value, so to speak, or better growth potential in the future. And again, 45% increase, fifth straight year. They've guided us for 37% in 2021, despite all the global chip shortage. And I would not be surprised if they come up with over another 40%, 45% year revenue growth in 2021. So revenues of 9.76 billion. I'm expecting over 13 billion, close to 14 billion revenues. Operating cash flow, look at this, up over 117% year over year. Record free cash flow, 777 million, 182%. Their balance sheet is comparable with Facebook. Like, they have practically no debt. So let's take a look at other stuff that we can kind of find. I'm not going to go over every single detail, but again, revenue trend, consistently growing revenues quarter over quarter. We've got gross margins also going up, so that's another really interesting stuff, is that it jumped 45%, and that's a 1 percentage point increase quarter over quarter, but that was a 2 percentage point increase year over year. So it was 43%, then it jumped to 45% in 2021, and it can potentially even go up to 47%. So they've guided us for another 2% increase in 2021. So earnings per share also pushed up as well. And let's take a look at this right here, the financial summary. Net income, just about 1.5 billion. Again, solid margins as well. We've broken down these segment results as well. So we broke down the enterprise, embedded, semi-customs, and how that's potentially going to contribute more and more to the overall revenues for the company moving forward. So you'll notice from Q4 2019 to Q4 2020 how this segment, their EEC, that's what it's called, their EEC, Enterprise Embedded Semi-Custom segment, is growing substantially at a much faster rate than their computing and graphics. So very interesting. And this right here, again, the total debt as of Q4 is sitting at 338 million. That's the principal amount. If you kind of look at the total net debt, sitting at 330 million with cash sitting at 2.3 billion dollars. So, and that's like up from 519 million, up from 787 million year over year, and the debt is down 156 million. That just goes to show the strong management, right? Think of it as your own personal balance sheet, right? If you've got cash and cash equivalents, debt, if you're paying down your debt, if you're increasing your cash balance, that's a strong, disciplined management from a company's perspective, right? That's what I love about the company as well. And then, of course, financial outlook for 2021, fiscal year 2021. Gross margins, again, an increase of 2 percentage points from 45 to 47, and they're expecting 37% growth. Do you guys think we're going to see AMD surpass 37% growth year over year in 2021, despite all the global chip shortages? What do you guys think? Let me know in the live chat. What do you guys think about advanced micro devices? And so AMD with their partnership or their upcoming merger with Xilinx, I think it's a strong partnership. Really depends on what the valuation looks like in terms of what the merger agreements are, what the terms of the deal are. So again, it's going to be very, very important because we know that Salesforce, even though merging with Slack, it was a great merger, but the stock got hit hard because of the deal getting a little bit out of hand for Salesforce. The Xilinx absorb makes AMD not only a great chip maker, as a Xilinx user for years, I must say they are brilliant, and shift to microcontrollers and 5G is not valued yet, in my opinion. Alan, I agree. I mean, those are great points, and I really couldn't agree more with you on the feedback. But what do you guys think? Despite all the global chip shortage that we're seeing, demand supply imbalances, the supply chain issues, is AMD going to surpass 37% year-over-year growth? Do you think we're going to grow over 40%, 45%? What is my target price for AMD in the next 5 to 10 years? That's a great question. I mean, I've analyzed the stock for the next 12 to 24 months. So I really need to do some deeper dives in AMD to better understand what the 5-year outlook looks like in terms of valuation. But just as a short answer, again, this is just my analysis. I see it being much higher than where it is today, because think about chips being so important in the economy moving forward. We've got crypto minings, we've got the gaming industry, we've got electronics, we've got iPhones, we've got like work from home trends for so much computers, MacBooks, like so much electronics, that chips. And then autonomous driving, like when you take into account electric vehicles, autonomous driving, there's going to be a substantial demand for chips in the future that I just don't see why AMD would not grow at substantial growth rates. All right, so pre-market, looks like we are turning, no, we're not. We're not. So Tesla down over 3%, trading as low as 323. It's exactly 7 p.m. So all right, let's bring out our notepad and let's quickly go over some stocks for us to look at. Oh, is Matt here? Where is he? Oh, all right, Matt. Thank you so much for joining. Definitely, check out his videos and live stream as well. So, he does a great job covering a lot of fundamentals, technicals for a lot of different things. So definitely, maybe we'll do like a collaboration or sometime. We've been talking for a really long time, so thanks so much for joining in, Matt. I really appreciate that. All right, let's take a look at some of the other stocks. So which ones are we going to start with first? That's the big question. Are we going to start with Tesla, NIO, Apple? What do you guys want? All right, let's start with NIO first, because NIO I think is down a little bit. So NIO, we're gonna go over to our white chart. We'll do NIO, Tesla, and then Palantir. All right, so NIO is down a little bit over 3.45%, but we're still trading above $44. That's the level to watch. And in my previous videos from yesterday, we talked about how this is a really consistent pattern with NIO, right? We're somewhat getting rejected at those two moving averages. So you'll notice how 21 and that 50 EMA, somewhat acting as a resistance for NIO stock. So moving forward, the next support that NIO kind of needs to validate is going to be sitting exactly at $44. So I will go ahead and mark that as $44 next support. What do you guys think? Are we going to see a validation of 44, or if NIO is going to break down below $44 per share? Let me know in the live chat if you guys think if we are going to see any type of a breakdown below $44. We were gapping down, so NIO was trading as low as $43.45, but then we broke out, and this right here again was a back test with heavy volume coming in at around $44. So do you guys think that NIO is going to validate $44 per share today, or if you're going to see a breakdown below that level? Because we're definitely seeing a lot of buying pressure come in pre-market, right? We're seeing these stocks kind of push higher as the yields kind of pull back as well. So For NIO, I mean, the only projection for NIO is like, you know, this right here. There's a few other outcomes that you can potentially look at. So, you know, we sold off and then we pushed up, we got rejected at those moving averages. We sold off even further to make a new lower low at close to $30 a share. We push up and right now we're retesting that. So we're gonna potentially come back down to retest 44. If you break down, the next support is gonna be 38.50. You know, that right there is going to be the level below $44, which we have also been watching consistently for NIO. And in my opinion, that right there is going to be a much stronger area of support, and we could see some higher highs and higher lows as well for NIO stocks. So I would not be surprised if, you know, the broader markets pull back, correct themselves, and NIO also breaks down below $44. That is going to be the level to watch remainder of today and going into next week. But if we do see any type of weakness for NIO stock, then 38.50 is going to be the next level for NIO stock as well. So I will go ahead and mark both of those as the next support for NIO. So 44 all the way as low as 38.50, and the resistance is going to stay put at $49 to $50 per share. Let's call it $50 because you know, that's where the moving averages are. So if we break out, then we can see a trend reversal for NIO as well, and it could potentially regain control over those moving averages as well. All right, so next up, we're going to talk about Tesla, ticker symbol TSLA. Tesla down also 3%. Now, the question of the day, we are down, trading as low as 678. You guys think 670 is going to hold up? Or if we're going to see a breakdown below that level once again? What do you guys think? So we did come down, trading as low as 666 before pushing higher pre-market. But do you guys think we're going to see a breakdown below 660 for Tesla? Ooh, that's a great question. That's a really unusual question to get. I think that's okay. I mean, I don't have a problem with that. On the YouTuber's tax question, you know, they have to do what they have to do, and it's the new law, so everyone has to abide by, right? $670 holds, $670 holds. So yeah, I mean, that's going to be the level to watch right here at close to 660. Again, previous support, we validated that on February 26th. The body of this candle kind of starts at 662, so that's going to be February 23rd. And previously, it has also acted as some type of resistance here, right? So that right there, again, lower highs, lower lows, potentially a retest of those moving averages. If we do see a pullback, 660 would be the first level to watch, all the way as low as $620 per share. So that right there are going to be two support levels to watch for Tesla. Support at 660, all the way as low as $620. And the resistance, of course, is going to be sitting at 720. 720 is the resistance because we got rejected. I mean, that's where the moving averages are. So again, lower high, lower lows. If you do break out, then 775 is going to be the next resistance that we need to watch. Yeah, I mean, it's like, you know, a lot of people, like, we could be short-term bearish on a stock and have a long-term perspective and long-term bullish on a company. That's completely fine, right? And that's okay. Like, if you want Tesla to tank so you can load up, because a lot of people can be short-term bearish on a stock and see them as great buying opportunities, only to have a long-term perspective on that company, right? Good morning, good evening. I personally do not see a 20% correction or a crash, so to speak, for the Nasdaq. I see more of a 16% drop. Again, that's kind of like my estimate. If the Nasdaq gets tapped out at 20%, that would kill the markets. 22%, that's like the yields getting topped out at 2%. Then we could see the Nasdaq bottoming out at 11,800. That's kind of like my price target, and a drop of just about 16%. Which is not something that's unlikely, something that we need to kind of address from a risk management standpoint as well. All right, so next up, we're going to go over next up we're going to go over Palantir. So Palantir is going to be on this chart. So Palantir is still validating $25. So, you know, that's kind of like what I'm expecting right now. So pre-market, you guys will notice that the low for the pre-market is 25.30. So if I go over to the 5-minute chart, you guys will notice again a huge gap down, validation of 25.30, and we are seeing some buying pressure pushing higher. So if you go over the 4-hour chart, this right here again is some type of lower highs being put in from Palantir. So this is something that we discussed in my last night's video. In fact, Palantir also came out with a new partnership with 3M, and this is kind of like the analysis for Palantir as well. Again, I'm not going to go over all of this because we've already gone over this several times. We have videos on this, and I also covered this on the live stream as well. But you're more than welcome to watch those videos. But Palantir, my price target for the next 12 to 24 months is going to be about $45 to $50 a share. Because a lot of people, it's really difficult for a lot of analysts to kind of, excuse me. So it's very difficult for a lot of analysts covering this stock to really understand what the intrinsic value looks like or what the price target looks like. Only because we don't know what's in the pipeline, right? For Palantir, that comes out, a couple, like yesterday, they told us that they partnered with, right here, 6-year partnership with Faurecia, right? It's an automotive company. It's one of the biggest manufacturers. They work with VW, they work with BMW, they work with Toyota, Hyundai, Kia. They work with Daimler. So so they work with a lot of companies in creating those sort of consoles and like interiors, exteriors, and this is a $17.5 billion company in terms of the revenue for 2020. It's a pretty big company. So even though they didn't, like, the financial terms of the agreement were not disclosed, so they didn't tell us how much the deal is worth, but my estimate is that, like, over the span of 6 years, this is easily like a multi-million-dollar deal for Palantir. So one of the biggest challenges for Palantir right now, like when you talk about recurring revenues for any company, let's say Spotify, right? It's a little bit predictable. Like you can make an argument, all right, so we have 100 million users right now. Let's grow them by 20% over the next 6 years. They're going to grow 200 million, 220 million, 250 million, whatever. But with Palantir, so because of the fact they're so business to business and they're personally like incentivizing businesses to use Palantir's Foundry and Gotham products, it's very difficult for us to understand, well, how many customers can we see Palantir close deals with this year or next year or the following years? Which is why I'm so bullish on this company, is because of, and I also know the retention rate, right? The retention rate for Palantir products is so high. Like once you're using Palantir's Foundry or Gotham product, from all the feedbacks that I've seen from IBM, 3M, like Faurecia, even they mentioned that it's going to significantly affect their cost savings. It's going to help them reduce their R&D costs. A lot of it's going to help them become more efficient. It's a win-win situation for both Palantir and the company using their software. So all we really need to see is expansion, right? That's what we need to see for Palantir. And if they're able to grow that clientele and kind of target mid to small size businesses as well, because they don't want to be too dependent on just like big cap, like small ticket customers that are generating over $10 million in revenue each year. But if they can target like mid cap businesses as well, it will really help the business kind of expand to other areas and other industries as well, right? So very, very bullish on Palantir. I know it's one of the stocks that gets a lot of hate from a lot of analysts and a lot of investors as well, because they've been bearish on it. They have a short position on it, so that's from a technical standpoint. $22.50 all the way as low as $25 are going to be two support levels to watch for Palantir. So Palantir, two support levels, $25 all the way as low as $22.50, and the resistance is going to stay put at $30. I mean, that's a resistance that we have struggled to break out of for so long. Again, that's going to be like an area of supply right here for Palantir moving forward. And right now we're also kind of making these lower highs. So you'll notice again it's getting rejected, and once it kind of fills in this gap similar to what it did here, so you'll notice that we were making lower highs and the horizontal support, and once we kind of filled in this channel, so boom, right here, retesting with a huge breakout. And this was also, of course, coming in after Palantir was shorted so much, and we had the GameStop and AMC short squeeze, and Palantir also short squeezed all the way to highs of $45. But eventually, now I feel like it's going to come more of a valuation and growth perspective that as we feel in this channel, so long as these two levels get validated, I could see a breakout even further over $30 per share for Palantir as well. So those levels are going to be very, very important to watch for Palantir moving forward. Mohit, what's going on? Welcome on board. Thank you so much for joining in. Can't wait for our call on Zoom next week. So very, very excited about that. William, don't forget that they are building Skynet. It's always profitable to be long. So are you talking about, who are you talking about? Which company are you talking about there? S&P cannot rise without tech. I somewhat agree. I agree. I mean, tech is always going to outweigh the gains or the losses in the energy, financial sectors, because it accounts for about 25% of the S&P 500 since it's market cap weighted. I mean, just look at these. Just look at these squares. I mean, they're so big, right? Microsoft, Apple, like you've got Amazon, Tesla, like they make up so much of the S&P 500. So if you were to, and even semis, right? Semis I would put in tech as well. So if you were to just look at this sector right here, right? I mean, this accounts for, I want to say like 25% at least of the S&P 500, and everything else is like right over here. So, you know, that's, you know, you're absolutely right. Tech is going to be very, very important for the S&P 500. Sheila, welcome on board. Thank you so much for joining. AMD price prediction. My price target for AMD, and everybody knows that on the growth portfolio as well, is at $110 a share over the next 12 to 24 months, because I feel like a lot of the catalysts for this company are not getting priced in at the moment. So I do see them having a lot of upside. All right, let's take a look at Nvidia, NVDA, and Nvidia. People are sleeping on AMD. I agree. People are. You know, it's down a lot, and I agree. But Nvidia also very, very solid. You know, company in terms of what it has the potential to do. They've been consistently gaining market share from Intel. It's down a little bit over 1.5%, trading as low as $511. So in my last night's video in the market brief, you know, we talked about how 515 would be the next support, but we are kind of dropping down a little bit. Ujwal, that's a great suggestion. Roblox is a stock that I really want to analyze, but right now it's a little bit too early for me to look into that stock, and the reason is very simple, because if you were to go over to RBLX, you know, there hasn't really been anything development, right? I mean, there's two candlesticks, there's no moving averages, there's no RSI, there's no MACD that's been developed yet. So we'll really have to wait, although I can look at the 5-minute and the 30-minute charts to understand, you know, the support and the resistance levels. But again, that's going to be only based off of 2 days worth of trading. I would rather have the investors kind of settle in and really identify where those next levels are going to be. And fundamental wise, I really need to look into the valuations and what the metrics and stuff like that. So really important stuff, because I know in the gaming sector and the technology sector, this stock has a lot of potential. So I'll definitely, you know, put out a video. And I'm also kind of doing a complete analysis on Corsair Gaming. You know, that's another stock that I'm very bullish on in terms of the growth potential it has in the gaming sector. Very low market cap, about 2 to 3 billion. So that report and that analysis is also going to be published with our private Patreon live stream this weekend. So I will be sharing that with them first, and then I'll do a separate video on them on the channel later. So for Nvidia, keep a close eye at 500. That's going to be the support. You know, that's been the support for a really long time for Nvidia stock. So support is going to stay put at 500. And then the next resistance is going to be 515, because we are trading below that level. So you'll notice that you're back down below this yellow rectangle. Although, you know, I do believe that we could see some buying pressure come in from the markets. Right, so let's take a look at where the markets are trading. I mean, we still have like a lot of stocks down like 1, 2, 3%, which is fine, which is okay, which is reasonable after like the last couple days. We've seen some such significant rallies. Like Tuesday, like how much, like you don't have to tell me the dollar amount, but what percentage were you guys up on Tuesday, right? I was up a little bit over 8% on Tuesday alone with the huge rally that we saw for tech, right? And it was so green. But I really want to know what you guys thought about Tuesday, right? Tuesday and Thursday, so 2 days this week that have been absolutely really green and rallies across the board for tech. But what did you guys think about that, and how much were you guys up percentage wise? So definitely, yeah, let me know in the live chat. I would love to know how green of a day Tuesday and Thursday was for you guys. So 12%, me too, around 8%, 10% up on Thursday. That's awesome. That's fantastic. 14.5%, Tuesday I was up like 6%, 23%. That's great. That's fantastic. 9 to 11%, around 9%, 10%, 5.45 on Tuesday. That's amazing. That makes me so happy. Like, and this was long overdue, right? This was like long overdue. It was up 27% yesterday, but heavy on NIO. That's great. That's awesome. Yeah, NIO had a great day yesterday, right? It was up over like 11% or something. 12% Tuesday, 5% Thursday, 8% Tuesday, 4% Thursday. That's awesome. 39% on options. That's incredible. Congratulations. 45%, 10%. That's great. That's awesome. So for Nvidia, keep a close eye at 500. I will go ahead and actually turn this level 515 as the next resistance intraday. We'll see if we actually break out. In my opinion, we could probably break out over that level once again. So the resistance is going to stay put at 515. For Nvidia, all the way as high as 530, 540. Because that's kind of aligned with those moving averages. Again, the 21 to 50 EMA. And the support all the way as low as 475. So those are going to be the levels to watch. Lee, we just broke down Palantir. You can go back on the live stream, watch that analysis, and then jump over to the live stream. We just broke down Palantir like literally before Nvidia, so you can watch that as well. If you just kind of go back a little bit on the live stream, you would be able to watch that as well. All right, so next up, let's take a look at Fiverr. Is down quite a bit. Like, it was up over 7% the other day, but again, this is another stock that if under 200, I would really consider. I mean, it was trading as low as 194, 195 like just the other day, March 8th. I really missed out on this opportunity. I don't personally trade options, although that's something that I really want to get into in the future. Like over the long term, I really want to learn about leaps and how to manage risk with that as well. So I'll definitely, I'll be considering that as well moving forward. So Fiverr, another stock, for you guys to look into. We've talked about it on the channel several times. $185 is going to be the next support, although I don't really think that it's going to be achieved for Fiverr, because 194, 195 was the level that we were watching coming in from March 4th and 5th. But the next resistance is going to stay put at 252 or $250 per share. So that right there is going to be the level to watch, because we got rejected like yesterday. The high for yesterday was 251. So again, getting validated at that 21 EMA to 50 EMA. 229, 230 is going to be the next support, all the way as low as 185. So for Fiverr, by the way, how many of you guys are actually invested in Fiverr, or how many of you guys are watching Fiverr as a stock? Support at 185, support at 229, call it 230, and then resistance at 252. Again, for everybody new joining, let's take a look at how many people we have. We haven't done that in a while, so we have a little bit over 1,000 people. Again, thank you so much, you guys, for joining in. We've covered a lot of different things. So to give you guys a very quick rundown, we've covered the broader markets. We've covered the FOMC meeting notes from January 29th. So you guys are more than welcome to kind of go back and basically look at what Jerome Powell said during his last meeting, and the next FOMC meeting is going to be March 16th and 17th. We've talked about AMD. We've talked about Palantir fundamentals as well. So again, everybody new joining, thank you so much for joining in. Good morning from California. I really appreciate you guys' support. So yeah, California would be like really, really early when I usually start these live streams, right? It should be around 5 or 6 a.m. So we're gonna cover Apple next. So again, but these right here are things that we've already discussed so far. So you guys are more than welcome to kind of go back on the live stream and watch that as well. All right, so next up we're gonna talk about Apple, and then we're gonna go over Qualcomm for a few folks out there. So Apple. Coming down to 120 pre-market, down about 1.5%. So $120 is going to be the level to watch. We did get rejected at that resistance at 124, I want to say, because we are still trading inside that lower high and lower low pattern, so inside that downtrending channel. So you'll notice that Apple, again, the price action, the strength of the pattern is still weak. However, I still think that we are making some type of a bullish, divergence or bullish sort of positive divergence between the price action and the RSI, because you'll notice that we are still making lower lows for the price. So we were trading as low as $116 per share, even though we are making some higher lows. Peyton, okay, that's good. Perfect. So I'll probably end the live stream 30 minutes after, and then we'll jump on our Zoom call. So thanks again. Really appreciate that. Thank you so much for messaging here. Otherwise, I would have not even looked at my phone. But thanks again. But again, yeah, for everyone who's on our Patreon, make sure that you comment the stock that you want me to look into during our live stream in that post that I just created. Please make sure that you comment that stock or that one ticker symbol that you want me to look into, and we're going to do a complete technical analysis on that stock. Maybe if we have time, we'll go over the fundamentals as well. But again, that's going to be accessible to you guys. It's going to be a 2 to 3 hours long live stream for all the members, and we'll do that together. We'll talk about the markets. We'll talk about the FOMC meeting as well next week, which is, again, very, very important, because whatever he says gets priced into the markets so quickly, and that could really result in either the markets going higher or lower. So for Apple, $120 is the next support, and then $124, $125 is going to be the next resistance. Of course, Apple, my price target is well over 150. But Daniel Lives is way bullish on this stock. He has a very bull target on a base case target at 175, and then bull case at 225. But support today, we're gonna be watching 120. What do you guys think? Apple validating 120, or if we're gonna close down below 120 once again? Let me know in the comments. Let me know in the live chat if you guys think that. So we're showing the 21 and the 50 EMA. So those are both going to be exponential moving averages. Again, those levels have consistently validated. In my experience, those are moving averages that have acted as strong support or resistance levels in an uptrend and in a downtrend. We've seen that with NIO, we've seen that with Tesla, we've seen that with Palantir, we've seen that with a lot of stocks that have validated those moving averages. Now, of course, if you were to kind of bring out the 21 and the 50-day moving averages, I mean, they're sitting roughly at the same levels at 124, right? We've got the purple line. The pink line is sitting as 130, which is also resistance. I'll kind of bring that back up once we break out over 124. This is just the chart that has been cleaned up a little bit from the previous analysis, just so it looks a little bit clearer in terms of the price support and resistance levels. But once we kind of break down or break out, I will bring back those prices as well. Yes, we'll do IPOE as well. In a little bit, and then we'll also do CCIV and Plug Power, but I'm just going to get through some of these stocks before we get to those. So IPOE, we'll talk about CCIV, and we'll talk about Plug down below, and we'll talk about NNDM as well. Alright, so before that, we're going to jump over to some other stocks as well. So any other big tech stocks that we can look at on the day. Pre-market, we've got about 30 minutes left for the markets to open. ChargePoint really taking a beating right now. It's down over 12%. Is there any company specific news on ChargePoint right now? So let's take a look. Wow, okay, so they reported their earnings. I forgot. They were supposed to report their earnings, right? So ChargePoint pointed to future alongside the company's Q4 earnings report. So CHPD expects its growth to be fueled by dozens of new electric vehicle models anticipated in 2021 across a wide range of segments and price points. With a strong balance sheet and capital-light business model, ChargePoint is well positioned to create shareholder value through broad attachment to the electrification of mobility for fleet and consumer vehicles. ChargePoint anticipates Q1 revenue of $35 million to $40 million and full year revenue close to under $205 million. Not sure. I mean, this is just a brief overview. So the earnings were bad. Musa, was it like the future guidance? Because I can't really seem to find anything else other than their expected revenue. I mean, that to me still seems reasonable. Not sure what their year-over-year growth is for the company for that. So, don't have a CHPD folder yet. Maybe I'll create that in the future. But, yeah, but it's getting hit hard. I mean, it's down over 12%. And, we'll see. Like, because I honestly believe that with ChargePoint have a European, US expansion, they have a lot of growth potential with electrification, with EVs. Market cap is sitting just under 9 billion. The price to E was a little bit rich, trading as over 100. I think you can get the dark mode as well. I'm not sure exactly where to go in the settings because I haven't really. Oh, maybe here. And then maybe you can go up to right here. So theme, you can do like white or black theme that you can change for Webull. You can also change this. So green can be down arrow pointing down, and red could be going up. So even if stocks are going down, we could have an up arrow. That will kind of ease in the pain. But NIO down over 4% now, trading below $44. Tesla down over 3.66. We've got Palantir down, trading below just over $25, but Tesla is trading as low as $6.73. We've got Square down over 3%. If this thing comes down to like 210 or like 205 around those levels, maybe like I'll definitely consider starting a new position in Square as well. Virgin Galactic, how many people are actually investing in Virgin Galactic? It's down a little bit over 2%, but I know that Chamath actually ended up selling. I haven't really looked into that news yet, but I did read it somewhere that he did sell his stake in Virgin Galactic. We got Enphase Energy. Again, if it does come down below 150, I'll definitely consider this one as well because strong company. I mean, it's seen a lot of profitability and a lot of growth in the future. In the future as well. So, I mean, easily, this is coming down from like $229, $230. So this stock got hit really, really hard, right? I mean, this was pretty significant pullback for Enphase Energy. I'm using the Webull app here. So this is the desktop app for Webull. And this right here is going to be my TradingView charts. So TradingView is another one that I use to kind of look at the stocks and track down different watch lists as well. So Shopify is another one, comes down to below $1,000. We almost touched that level, I think yesterday or a few days ago. But $1,000 is kind of like under that is really consider Shopify. Etsy, maybe. What do you guys think about Etsy? Undervalued, overvalued? What's the price target that you guys have on this stock? What do you guys think about Etsy right now? Webull. So it's gonna be Webull as in right there. So WEBULL. We as in WE and then Bull as in BULL. Okay, fair value 200. Right. All right. So let's take a look at QuantumScape. QuantumScape also down a little bit over 3%, trading exactly at $56. So that right there is going to be the support level to watch, from previous videos. Again, previous resistance, previous support here. We have validated that level several times, and this right here, a very, very strong level of support for QuantumScape, right, at close to $42 per share. I mean, that level right here has gotten validated so many times in the past. So that right there, $42 validated support here. Validated support here. So that right there are going to be two support levels, strong support level and an area of demand for QuantumScape. And then the next resistance is going to stay put at close to, I want to say, $61 per share. Old support, resistance all the way at $72. So support today, right now, 56. That's where we're trading pre-market. Ooh, the yields up substantially. So QuantumScape support at 56, resistance at 61, all the way as high as 72. And there's also going to be a really strong support sitting at $42 per share. So CCIV, $21 is still getting validated here. So again, we saw a significant pullback, validation of 21, but we're still getting rejected at 27. That's the level that we talked about here. Coming in from January 25th, we got rejected, which then acted as a support here. So we validated that level over here. And this right here, again, is acting as some type of resistance for CCIV. So moving forward, although we are making some progress, it just broke out of its 21 EMA. So we'll see if that level continues to get validated. But for CCIV, the next support is going to stay put at $21. That's been the support for a really long time. And the next resistance is going to stay put at $27 per share. So kind of like align with this level. Call it $27.12, $27.10. Again, previous resistance, validated support, previous resistance. So that right there is going to be the level to watch as a resistance at close to $27. Today marks the 1 year of the crash of 2020. Does it? I thought it was like March 18th. March 18th was kind of like the low point for the S&P 500. But let's take a look at the SPX. And this is like pretty crazy stuff if you think about it, right? Like it's been exactly 1 year since we had this significant crash. Like look at this drop. Like this is just absolutely monstrous. Like if you think, when you think about hindsight 2020, like February 19th, most of us can't even remember where we were February 19th. Right? Most of us can't even remember what we were doing back on February 21st or February 19th when it was just like at that high point, and then literally things went south so fast, so much so fast, down over 35%. So, but since then, I mean, we've come a long way. We've done a great job recovering for the markets. I mean, this right here, again, massive recovery. March 23rd or March 18th. Let's take a look. So this right here is March 23rd is the lowest point. So you're right, Suraj. That is the low point for the S&P 500 when it traded as low as 2,191. So, and then March 23rd. So, and then February 20th or February 18th was kind of like when it started. So if you take the high point and the low point, the 1 year anniversary of that crash would be basically on March 23rd. But where were we on March 12th or March 12th? Yes. Thank God it's not Friday the 13th today. Thank God it's the 12th. But March 12th, we were trading over here. So March 12th, the S&P was down over 9.5%. Jeez, exactly about a year ago, we were down for the S&P over 9%. That is some pullback. That is crazy. Tsunami of drops. I agree. But with the drops came great buying opportunities. Wouldn't you guys agree? Alright, so next up we're going to talk about Plug. So PULG and Plug. Again, somewhat getting rejected. At that resistance at close to $44. And if you go over to the daily chart, you guys will notice again, we're getting rejected by those moving averages. something that Plug Power has also done very consistently is kind of validated those moving averages, right? The 21 EMA, the 50 EMA were consistently kind of validating that support. We pushed up. And again, this is what I meant by like in an uptrend, those moving averages act as really strong support levels. In a downtrend, those levels act as really strong resistance levels. So we'll see, you know, this right here, pullback, validation, this right here, again, a rejection on the 21 EMA, on the 50 EMA, and this right here, another potential resistance for Plug Power as well. And moving forward, you know, that right there is going to be kind of like the level to watch, which is going to be sitting at close to $47 per share. I only got into investing in November, so I missed on all the discounted prices. That's actually a good thing. That's Dylan. Think about it. You got into investing in the first place. That's progress, in my opinion, right? And that's like the big step forward, is like people need to start investing in the first place, right? That's the biggest hurdle, is like getting started. Don't worry about missing out on the discounted prices, because there's going to be a lot of opportunities in the markets in the future. I can tell you with a lot of confidence that, you know, this was not the first time that we saw the markets crash over 20%, and this is certainly not the last time we're going to see a crash of over 20%. And that's something that we always need to be prepared for. You know, we can be perma bulls, like we can expect the markets to be optimistically going up every single year while managing that risk, while maintaining that cash exposure in our portfolio, while kind of hedging our positions and kind of strategizing in a way that we take advantage of those pullbacks if they occur in the future. So, you know, see that as a really good positive, is that you got invested. You got started investing in the first place. That's a great sign, you know, as it is. So really happy about that in general. So for Plug Power, 37, maybe even call it at close to $42 a share. So that right there is also going to be some type of a support for Plug as well. So sitting at close to $42. Again, validated this with this double top support here. So aligned with this level. All right, guys, so we got about 20 minutes left for the markets to close. We'll listen to Bloomberg a little bit, see what they have going on and what they talk about. And then we'll kind of map out some other stocks, kind of break down the charts and 4 different things. So Plug Power resistance at 47. And support at 42. The first support at 42 all the way as low as 37.50. And then we got resistance sitting as high as 47.50. Again, for everybody new joining in, thank you so much for joining. I really appreciate you guys. Is it premium edition or Pro Plus trading view? I'm not sure what exactly you're asking. So are you saying that is a premium edition or Pro Plus on TradingView available? Because it is, you guys can join it, but there's also a free version as well. All right. So let's take a look, listen to if there's anything going on here. Bipolar market. Yeah, and you know, again, I would have been more comfortable if the markets did not rally so much the last couple of days and they just stabilized a little bit, but because that just creates for more volatility, right? After a 4% day on the Nasdaq, well, what do you expect the next day? Like, you know, we are going to see some type of a pullback because that was a pretty severe and aggressive move. If you push up 0.5%, 1% on Tuesday, 1% Wednesday, 1% Thursday, you know, 0.5% Friday, that's more of a more stabilized move and more consistent with the pattern as opposed to like just swinging back and forth. 3%, 4%.
Of the wall.
Yeah, and you know, let me know what you guys think about this chart right here. Zach, that's a great point. You know, a lot of the tech stocks will still be in the green on the week, and you know, this is like a really important chart that we looked at in the past, and that is, you know, when you look at these 3 outcomes for the Nasdaq, you know, we've come down to the 21 EMA perfectly, before validating that support and getting pushed up higher. Now, the only thing I will mention though is, so let's see if you guys kind of agree, disagree with that, and again, I want your guys' opinion and analysis on this as well. So today is actually very important in my opinion for the Nasdaq index, and the reason is because you'll notice that we sold off here, so we came back down, validated that. So hold on one second. So right here, so we came back down, validated that 21 EMA, but this candle was kind of short of the previous week's candle, which was in red, right? We saw a drop of over 0.5%, and we did not really cover, or so to speak, this wasn't like an engulfing candle for the Nasdaq like we saw over here. So this right here was not only a validation of that 21 exponential moving average, so that 21 EMA, so the black line you guys see on the chart, but this week we were up over 9%. This is the week coming in from November 2nd when we had a little bit more of a clarity when it came down to the elections, a bullish engulfing candle for the Nasdaq, which resulted in a huge rally all the way to highs of over 14,100. So right now we're in a very similar pattern. So right now we need to really see and understand, well, if the Nasdaq can close above 13,400, right? That's going to be the level, because if we close above that level, then again we'll potentially have like a bullish engulfing candle kind of overshadowing last week's sell-off when we were down a little bit over 2%, and so far we're up over 3.7%, and that could potentially maybe even lead to further rallies up top, because this right here was a weaker move, which is why we dropped once again for the second time for the Nasdaq. So this could happen. We could see a push higher and maybe have a double top resistance and then pull back once again. But what do you guys think? Do you guys think we're going to see a much severe pullback for the Nasdaq, break it down below the 21 EMA, the black line, or if you guys think we're going to see a validation of that level once again and a potential retest of the all-time highs at over 14,000 and then a breakout over that level as well?
Down by about 1.6% before the bell.
All right, so let's listen to this a little bit.
Track semiconductors by 1.5%, and check out the action in the Guggenheim China Technology ETF, sinking 4% in the pre-market as China expands its crackdown of big tech, this time targeting Tencent. That regulatory issue is an overhang for tech broadly today, but of course that is just one part of the story. Higher yields really is the other and probably the primary driver. With long-term borrowing costs climbing, elevated multiples become a lot harder to justify. That's why we've seen a sell-off in tech stocks in tandem with treasuries. The Nasdaq 100 falling into a correction at the start of this week, though it is off the lows now. From a technical perspective, it had been extremely oversold. There was also some short covering evident earlier this week, and then the risk-on sentiment from stimulus yesterday all aided in the rebound. But once again, it is faltering today. We have seen a pattern emerging. Every update over the past 2 weeks for the index is followed by a sharp down one. If you look at the flows for the cubes, though, the Invesco ETF, of course, that tracks the Nasdaq 100, it has seen about $2.9 billion in inflows this week. It, of course, follows last week's pullback in which it saw the largest outflows since September, but it would suggest investors are gaining just a bit more confidence to wade back into the big tech trade, John.
Kelly, thank you. It has been the cheap guide of the last couple of months, hasn't it? I tell you where the 10-year Treasury is, and you can guess where big tech is. So this is what we wanted to do this morning. Once again, that tug of war. Yields higher, growth equities lower, big tech suffering. Wanted to put together a world-class bond market strategist together with a world-class equity strategist and talk about how these two worlds are colliding. So let's do that now with Morgan Stanley's Michael Kushner and Jonathan Golub of Credit Suisse. Michael, let's talk to you first, sir. 160 on a US 10-year. I keep thinking how much more oxygen is left up here, and the response I get when I ask that question is a whole lot more. What's your response?
It's a very, very good question. Yields are not that much higher than they were prior to the pandemic. So if you go back to February of last year, we were hovering around the 1.5%. So everything else reflating dramatically. I just looked at convertible bonds have generated a 30% return from the end of February last year to the end of February this year. So there's been huge reflation in equity prices. High yields done well now, but treasury yields are still hovering around the same level. So you can easily argue treasury yields are the things that are out of line with everything else. But on the other hand, if the Fed sticks to its plan and intends to keep rates as where they are today and not raise rates in 2024, the market is already pricing in a return to a 2.5% cash rate over that time frame, given the steepness of the yield curve, which suggests that yields around these levels, if the Fed sticks to its game, it'd be difficult to get yields a whole lot higher unless there's a really sharp upward movement in inflation or the Fed changes its game plan.
And this is critical for the view on growth equities. Now, John, it's been the story the last couple of months, but it hasn't always been this way. Growth equities can do okay in an environment of yields substantially higher than where we are right now. John, as you look at that correlation, that deep correlation between treasury prices and growth equities, you expecting that to settle down, stabilize, even break down a little bit in the weeks and months to come?
You know, Jonathan, we've actually gone and kind of quantitatively worked through these numbers. We're finding that, as you see, the overall market is going up with interest rates, and the vast majority of sectors are as well. And so this discussion that that tech is in some way a counter asset to the direction of rates, I think is wrong. What I do think is going on here, though, is when the treasury yield is going up, it's a sign that the economic backdrop is improving. And in those environments, people want to put their money in cyclical shares in companies and industrials and banks and things like that. And where are they going to fund it? Like, so if you're a mutual fund manager and you want to increase your exposure to industrials, the thing that you're overweight is technology. So I don't think it's that the interest rates are doing the damage to tech. I think it's the marketplace realizing that that tech is I don't want to say dead money, but less attractive than other assets within the stock market right now because they don't have the same level of cyclicality.
Making the argument it's more of a correlation and not causation. Michael, if we start to get a correlating tighter spreads, then okay. If we start to get correlating higher equity prices, then okay. But if we start to see spreads widen and equity markets roll over and the dollar strengthen and financial conditions tighten and not stay loose, then I imagine it's on the Fed's radar in a different way, Michael. Do you think it's on the Fed's radar next week?
It's a good question. I think they're confronted with a huge change in economic outlook relative to where we were in December. Just think what's happened this year with regard to the December stimulus plan, with regard to the change of democratic control of the government and the 1.9 trillion plan we're getting. The Fed is used to having to do all the heavy lifting themselves and have to keep talking about how they're going to support the recovery. But guess what? This time around, fiscal policy seems to be more than just the heavy lifting. They're doing massive amounts of lifting, and they're confronted with a much stronger economic projections. What the sell side is coming up with right now, what we're coming up with relative to where we were 3 months ago, suggesting that they have to likely adjust their economic forecast to higher growth, lower unemployment, probably higher inflation relative to where they were thinking about things in December, which makes people nervous about them talking about, well, maybe we are going to have to raise rates sooner, bringing forward rate hikes to 2023. Again, upward, but these are good news, it's not bad news, but you're right.
Totally agree.
Real interest rates are still negative, and it's about the path, how fast they rise. We don't want to have a shock which causes a tantrum in markets, which then unwinds all the optimism about the future. We want to have a slow, gradual rise. Let the air out of the balloon slowly, not too quickly.
If you're anticipating hitting your targets earlier and you need to raise interest rates because of that, I can't see how you can make that a hawkish equation. You're talking about a faster recovery. John, looking ahead to next week and just reflecting on what you said just a couple of moments ago, it doesn't sound like you're as obsessed with what's happening in the rates market. It doesn't sound like you've been watching that supply that's come through, 10s, 30s, over the last week. It sounds like you're constructive on equities purely on a better backdrop going forward from here. So what attention do you pay to the Fed? What specifically do you think we should be paying attention to from the equity market perspective?
Well, first of all, if we're taking a look at interest rates, and Jonathan, you mentioned this just a little while ago, are credit spreads coming in? Credit spreads are a measure effectively of whether the market believes companies are going to default, and when you have an environment where the economy is accelerating, businesses get bailed out by the backdrop. So I think the surprise could be, yes, the treasury goes higher, but the credit spreads, especially at high yield, they come in and they offset any damage from that. So that's one thing that we're really focused on. Second thing is, look at commodity prices, oil, copper, lumber. these are signs that demand is incredibly robust. Those are all very positive. Inflation expectations, so at some point in time, higher inflation is going to be a concern, but right now it's another kind of verification that there's strong demand. So I think it's really important that you look at the treasury yield as part of a mosaic of a variety of things that tell you about economic health rather than as a specific number.
John, it's great to catch up and to get that alternative perspective. Jonathan Golub there of Credit Suisse. Michael Kushner of Morgan Stanley, sir. Michael, always good to catch.
So a lot of perspective there, and very, very interesting stuff as well. Of course, we've talked about it, and how the yields are, there's two reasons. First one, of course, they're suppressing the valuation for a lot of tech stocks, and that's what's driving tech stocks lower, is because when the yields go up, valuation metrics, cost of borrowing goes up, but then also it favors some of the other sectors, right? Industrials, and some of the energy and financials as well, which is why people are liquidating, so to speak, their tech shares to basically go into some of those other parts of value, right? And this is something that we also talked about, like complete rotation out of tech. And ARK Invest, like Kathy Wood, we also broke it down, is how she sees some parts or some pockets of these value as like value traps, and how they're the most disruptive sectors in the future, right? Those are going to be the ones that are going to be disrupted the most by tech in the future. So, all right, so we're going to go over the S&P and the QQQ ETF, even though it's tough, but we have to look at it. We're down just about 1.5% on the Qs, and then for the SPYs, we are down roughly 43 basis points. So again, we're seeing some type of a pullback pre-market. We'll see if that continues to persist after the markets open. And then quickly going over some of the stocks. So the yield is now up over 4%, trading as high as like 1.611. So again, we're pushing higher. This again is going to be the weekly chart. And looks like we are headed up till like 1.981. That's going to be kind of like the level that everyone is expecting for the yields to go up. And for us to watch as well moving forward. So again, let's take a look at some of the other stocks. So we are down substantially from the highs. So ChargePoint down over 14. We've got NIO down over 5%, trading below $44. Tesla is down over 4%, trading as low as $671. We've got Enphase trading as low as $158. We'll see if it comes down below $150 today. And then we've got Palantir down over 3.78, although it's still kind of validating that $25 level. And then we got Square down over 3.71%, trading as low as 232. Fiverr down 3%, Etsy down over 3. We got Shopify down over 2.82% as well. We've got Nvidia, we've got PayPal. PayPal also down over 2. PayPal was green intraday, like pre-market, but then it sold off. So if you go over to the 5-minute chart, so there you go. Like we've seen a lot of selling come in for PayPal like recently from like 7:55 a.m. Nvidia down 2.2. We got Snowflake down over 1.8. Corsair Gaming down over 1.6. AMD down about 1.5, trading below $80. Apple trading exactly at 120. What do you guys think? William, I sound sad. No, I'm not sad. I'm just getting tired a little bit. Like it's exhausting because it's about 8 p.m. Eastern, so maybe I'll do this for like maybe another 15-20 minutes. But no, I have never used margin. I don't use margin right now. In fact, I just put in a little bit of cash in my portfolio today, for potential red days and for some buying opportunities. So we'll see if that happens, and kind of I'll alert everybody on the Discord on if I'm seeing any opportunities out there. So again, if you guys want to get access to that, if you want to get access to the Discord, get access to the TradingView charts, get access to all the analysis, all the research that we have done. I put PDFs and Excel files on our Patreon as well, so the link is going to be down in the description below. Again, feel free to join as well. So contrarians will be buying the tech stonks hand over fist. Mike, I couldn't agree more. I will be here to add more to some of my positions. I mean, you know, Square, I'm looking to get in under 200. End phase, I want to get in under 150, but if it comes down to 125, 130, even better. NIO, I don't think we're gonna see like $30, but if we do, like, that's gonna be incredible. Like for Tesla, like the thing was trading as low as 550. 550. How many of you guys actually did buy Tesla stock like the last few weeks? Like, let me know in the live chat if you guys did get a chance, or like if you did, you know, buy Tesla stock recently or not. So QQQ is down about 1.4. We got the S&P down about 38 basis points. Let me go ahead and quickly go over some of the charts. That's awesome. Bought 3 shares. I bought. So we're gonna put NIO up here. We're gonna put Tesla over here. Apple, and let's put Palantir up here as well. So we got the 1 minute charts. Perfect. Tesla down over 4, trading exactly at 669. Palantir is still somewhat validating $25, and then Apple is also down about 1.3%. So, what do you guys think? Quick, we got 30 seconds left for the markets to open. Green or red? Green or red on the day? What do you guys think about the close? We got another week potentially in the books. 30 seconds left for the markets to open. What do you guys think? Green day or red day for the Nasdaq and the S&P? Go. Red, red, red. Temporary sell-off. Red, of course. Red. A little bit of red. Red Friday. All right, here we go. It's gonna be the SPY and the Qs. Let's also actually bring out the yields over here, so we have everything that we can look at, right? So over here we got the yields, over here we got the Nasdaq, ticker symbol QQQ, and this right here is going to be the S&P 500, ticker symbol SPY, and over here we got all these stocks. So look at that, Palantir with a huge drop, over 5% down now, trading as low as 25.44. We got Apple struggling, trying to stay above 120. We got NIO also dropping down over 5%. We got Tesla having that usual morning pop. We'll see if that continues to sustain or if you're going to see any type of a pullback, and for Tesla to also kind of roll over as well. So NIO definitely coming down hard, down over 6% now. Apple again selling off, and then Palantir is also making lower lows and lower highs. So NIO like aggressively pulling back, down over 6% now. And Tesla also kind of rolling over, and Apple is now on a full tilt, breaking down below 120 potentially. Let's take a look. Palantir also potentially going to break down below 25. There we go. That's the drop from the Nasdaq, down over 1.6%. The S&P also down about 0.5%. So we are seeing a lot of weakness . So that's going to be the SPY and the QQQ. So we're seeing some stabilization. We'll see if that continues, or so much red today. Look at that. It's great. Like this is, I mean, are you guys excited about this red day, or what do you guys think? Like NNDM down over 8%. NIO trying to make a comeback. And so is Apple. We did trade as low as 119. Tesla also trying to make a comeback. So even though the Nasdaq is showing a lot of weakness, we'll see if he actually... Ooh, look at the S&P. Look at the SPY coming out of nowhere. The Q is still struggling a little bit. And these right here are going to be the yields, trading as 1.6. Oh, SPY just hit a new high of the day. It's down about 33 basis points right now. And the Q is also getting bought up. Look at that. So definitely a NIO kind of pouring some of those losses. Tesla 675. Iggy, I will be buying today. Just depends on how much red we see. I mean, I have specific support levels if they get triggered. Like I'm really trying to establish a position in Square. NIO I already have. Square and Phase Energy and Shopify. Like those are three companies that I'm really looking forward to establish a position in. We'll see how much red we see. Right now we are looking like we're seeing some type of recovery. Apple, although, is still struggling. Apple will kind of struggle a little bit because this is a company that, like we listened to in Bloomberg, a lot of portfolios have Apple, right? I mean, if that's like an overweight stock, and if we are going to see a rotation, Apple is going to be like a staple stock that most people are going to consider kind of trimming their position in so that they can go buy value. They can go buy cyclicals and energy, financials, some of those stocks. Speaking of, let's take a look at our race, our horse race. This right here is the markets that they just opened. We've got energy, financials leading right now. And from pre-market, we had, so this right here is going to be pre-market. Energy, financials leading the pack up over 90 basis points each. And we had consumer, cyclicals, discretionary, and tech kind of lagging behind. So NIO down only 4% now. Tesla also pushing higher. We'll see if that actually continues or if we're going to see some type of a weakness. So Palantir validating $25 right now. There you go. So massive wick, QQQ. There's a lot of weakness with the yields pushing higher once again. So that right there is going to be the yields. Look at that. Yields ticked up higher once again, up almost 5%. So that's what's driving these two right here further down. So the Q is now down 1.6%. The S&P is down about 0.5%. Look at that. The yield is ticking higher again. Trading as 1.617. Apple again really selling off, making lower highs, lower lows. Trading as low as $119. Tesla rolling over. Palantir rolling over. NIO is potentially rolling over. And we've got a lot of stocks down in the red rolling over as well. Look at the yields. 1.619. I think the Q is going to probably drop below 2% on the day. Like, I wouldn't be surprised if that actually ends up happening. So the yields seeing some type of a downtick. Wow. So the QQQ is really selling off, down about 1.77. Got SPY down about 0.5%. So XLP is going to be industrial, consumer staples. Consumer staples is really doing well. So let's take a look at what is consumer staples. Consumer staples. Consumer cyclicals is over here. I'm guessing it's going to be mostly like tourism, restaurants, and companies like that. Apple down now almost 2%, Shopify down over 3.75%, Nvidia down over 2%. We got AMD down over 2%, Microsoft over 1.6%. Only companies in the green right now are CVS, IMV, like at least on my watch list. GME is up over 4%. Let's take a look at energy. ExxonMobil, Chevron both up over 1% each. And then let's take a look at the banking sector, the financials. So much in the green except for PayPal and MasterCard. But Wells Fargo up over 2%, Citigroup up over 2%, JP Morgan up over 2%, Bank of America, Goldman Sachs. They're all in the green. Apple is really like, the pattern for Apple has just been lower highs and lower lows. It's just been really, really struggling for so long. It's almost midnight here. I would definitely recommend sleeping and then just turning off the streams, turning off the stock market, and not looking at your portfolio today. It's like, there are some days when you have like so brutally in the red that you just like prefer to like not even look, unless you're going in there to make transactions, make buys and sells, or whatever the case may be. But yeah, I mean, some days are like that. There's no shying away from it. Like last couple of weeks, there's been days when it was just so down in double digits. Like Tesla and NIO, they were down so much in the red. Like Apple now down over 2.2%. Like this stock is getting liquidated heavily, right? This stock is a staple stock that a lot of people have. It's dragging the S&P, dragging the Nasdaq lower with it, even though other stocks could potentially be doing okay. NIO, I fully expected breaking down below $43, $42 today, and then Tesla also to come down to like 660, 665 levels as well. So Iggy, that's awesome. Thank you so much. I really appreciate that. Great feedback. So thank you on that. Square, great fintech company. Definitely, worth looking into if you have a long-term perspective on that industry as a whole and that company in general. So definitely, my perspective on fintech, more specifically Square and PayPal, are both very, very positive. I do see a lot of potential for both of those companies in the future as well. Tesla making some moves. Trading is at 675. Right? Look at that. And so is Palantir, up over $25. Apple's still struggling. NIO also struggling, down about 5% on the day. And I mean, this is strictly correlated with the yields, which is why I fully think that the markets right now, like, it's kind of hard to judge. Like, this is all based off an expectation that interest rates may go up and inflation may go up, because and yeah, the stock market is forward looking. 12 to 16, 18 months is what we're expecting, but you'll notice how perfectly correlated right now they are. Like, if the yields tick down, the Nasdaq and the S&P tick higher. If the yields push up, so this right here was the entire time when the yields kind of ticked up, right? So you'll notice how the Nasdaq and the SPY ETF kind of ticked down. So it's just completely correlated right now. But the SPY is definitely doing well with the help of energy and financials. So we got our horse race. Energy up over 67 basis points. That's going to be the blue line. We got real estate. We got industrials and financials. Those four are going to be the leading sectors. And then tech is struggling. Tech is the last sector that's down about 13 basis points. So Palantir validating 25 right now. Tesla validating somewhat 650, and NIO is validating like that $43. The support is more so at 44, I would say. So 44 is a level to watch. And for Apple, we'll see $120 acts as any type of a support, because that's going to be very, very important, right? Alright guys, so I'm actually going to be ending the live stream very, very soon, because I do have to be somewhere in 15 minutes, but I really, really do appreciate you guys' support and joining in. To give you guys a very quick update, these right here are going to be all the levels that we're going to be watching for all these stocks. So we did break down quite a few. We also talked about the FOMC meeting and a lot of other things as well. So thank you so much for joining in. The markets are down, but that's okay. That's strictly off of yields, and that's going to have a risk on, risk off moment. That's going to go back and forth for some time, but always see them as some great buying opportunities. At least in my strong opinion, I'm going to consistently be adding more if tech continues to sell off. Mario, I really, really appreciate that. Thank you so much. Workhorse and the lawsuit. I did not know about the lawsuit. So what is the lawsuit about? I know that it didn't win the USPS contract, but what is the lawsuit about? I haven't really done my research on Workhorse in the recent weeks, but I will definitely look into that stock for you. So again, thank you so much for that. And I'll maybe I'll talk about that during the next live stream as well. So again, thank you so much for joining in. I really appreciate you guys. The Patreon link is going to be down in the description below if you want to join, get access to our Discord, Trading View charts, and the growth portfolio. Make sure that you drop that like button, hit that subscribe if you're new to the channel. Entry for Square for myself is going to be under $200. So that's going to be the level that I'll personally be watching. So again, thank you so much for joining in. I really appreciate you guys. I really do. And we're almost at 50,000 subscribers. Together, we're going to make that happen. As always, happy investing, and I will see you guys in the next video. So, all right. I forgot where I put the live stream on. But again, yeah, thank you so much for joining, and we'll talk next time.